Good morning, everybody, and welcome to the morning volatility report. This is Andrew Giovinazzi, Chief Operating Officer of that company right there, OptionPit.com. All right. Your home for options, trading, and education, right above the Blues Brothers there. OptionPit will be launching our hedge fund soon. So anyway, that's good news for us. Look for more on that. Besides that, let's talk the markets today. Mark discussing RVX finally catches up with VIX volatility in the blog last night. Oh, but before that, okay, sign up for our vol trading course that is next Saturday. We already have a ton of people signed up, which is great. If you want to learn how to trade volatility, you have to know how it works. Once you know how it works, it's a lot easier. So, take a peek. All right? Take a peek at our course. I guarantee you will learn something. All right, now off to what we have here. Now let's take a look specifically at, you got earnings out in the oils. They weren't as bad as everybody thought, but they're still not great. Mark was talking about volatility in the Russell. And notice a couple things about our current market. Okay. Blue line, 20-day volatility. Red line is 30-day forward vol. Look at our 10-day vol. You know, we had that massive rally a couple days ago. So all I would say is Russell volatility is getting pretty cheap. SPY volatility a little more fair, I would say. So the Russell a little more volatile. SPY starting to get less volatile as we kind of move into the holidays and the big events are surrounding what we got. Non-farm payrolls next week, which might sway things one way or the other. It should keep a bit of a bid to volatility going into next Friday. We'll get some idea from the next payroll report, and then we have the Fed moving into December. So as far as stocks go, I guess there is another potential QE bump from somewhere. I just don't know what country is going to announce another round of QE, which is basically felt like it fueled this rally from sort of here to here, somewhere along those lines. And I think that's still I still think that's a reasonable range, somewhere down to 200 on the SPY. As far as upside goes, besides some sort of QE push, I don't see where it comes from. But earnings are out, except for the big tech. The earnings were just so-so. And I think that's what we have. So I'm expecting volatility to stay at least semi-bid. The vol futures will decay. And I don't know if there's going to be a lot of action in those. So really, it sounds like time spreads are the ideal positions, at least for the next couple of weeks. I don't know if there's enough at-the-money volatility to sell. There could be. But for right now, I'm looking more along the lines of time spreads and things like that. Yep. They seem to be doing okay. So that's what we got for positions. And sometimes that's what the market gives you, and it's going to be a lot harder to find things to do. I mean, besides LinkedIn moving on earnings, I mean, notice everything here. It's like, it's all up fractionally. Very, very little movement in just about anything. And I think that's what we got as a symptom of what's going on right now. And I will see you all in chat. Have a good weekend. Have a happy Halloween, and we'll talk very soon. Bye-bye.